Good morning and welcome to Morning Markets with True Potential. Today we'll be focusing on much better than expected GDP data coming out of the UK, and then we'll also touch on the Federal Reserve announcement of pausing interest rates. As Jeff briefly touched yesterday, we saw a positive GDP surprise number from UK yesterday. In April, GDP grew by 0.2%. This was after we saw a drop of 0.3% in the month of March. What was strong side was retail, again, came in much stronger than expected. We also saw some creative industries delivering better than expected performance. Though we saw some weakness in construction sector. So where does it leave us? It's a positive start for the second quarter, which puts some of the recessionary outlook and fears of recession later in this year at the back foot. This also leaves what Bank of England would do. We expect the Bank of England to continue to raise rates through summer. There are some expectations the Bank of England will have to raise rates much further, much beyond where markets are pricing, nearly topping around 6% today. Again, this is on the back of inflation rate that has been much slower to come down. But we'll see how it plays out. But on the market reaction, we saw as a result gilt yields edging higher. We also saw the pound really delivering a positive return for yesterday. At one point, it nearly touched 127. Though this morning we have seen some retreat in sterling particularly versus US dollar. Again, this is all in all positive development for the UK economy in general. Shifting away to across the pond, we saw in the US the Federal Reserve announcing its much anticipated pause in interest rate cycle. They left the benchmark rate in the range of 5 to 5.25%. This is after they have 10 consecutive rate rise we have seen from the central bank since March 2022. What was interesting was the Fed dot plots, which is the federal officials' forecast for long-term, where they see long-term interest rate expectations over the coming year or so. We saw some hike in those expectations, where the Federal Reserve Committee expects the interest rates to raise up to 5.625% by middle of this year, which was a bit surprise to markets. Markets were probably expecting another 25 basis points rise in July, but another from here on we are expecting now another 50 basis points hike at least in this cycle. This was even a surprise because we have seen some recent inflation prints have been coming down. We saw the CPI print coming down for May to 4% from 4.9% in month of April. We also saw yesterday purchasing price index also delivering, undershooting the expectations, and it came in at 1.1% for the month of May. So for now, we will leave it there, and thank you very much for watching Money Markets.